Hello, and a massive hello to everybody. How's everybody doing? Rocky and rolling in a free world. Here we go. No trade calls or recommendations or response or their own stuff here for educational purposes only. 26th of Feb 2020. So let's do this, guys. So basically, again, usually the videos we put out the video on Sunday, then we tend to put out a midweek video, and if something special sets up, we might do another video. As I said on Sunday this week. But the purpose of these video updates is just to keep people updated on what's going on and the opportunities. So you'll hear from me a lot when stuff is going on. Even if I have to put out a short video every day, I want to make sure I give you as much input as I can. So let's get started here. So far so good. Our base case here is being coronavirus is going to get worse before it gets better. Penny still has to drop. We want to be short. And again, make hay when the sun is shining. There's times where you have to stick to the moves because you could get paid, you could make your month, you could make your quarter, sometimes you can even make your year on certain moves. So here we're seeing an acceleration. I tweeted out yesterday, funnily enough, it's early days, but I wonder if yesterday was the day Trump just messed up his re-election chances with all the BS on the coronavirus, right? Because if now we start to get big outbreak like we did in other parts, he's not going to look too good. Now, overnight, he's been backtracking on Twitter, so I think he realized he messed up. But again, let's see. Remember, last Friday, there were like 2-3 cases popped up in Italy, and by over the weekend, we're already at like 300 or something. So things can move quickly. Now, and I think the issue here in the States, it can expose a lot of problems. You see people go to get tested, they get charged like $3,500 for a test, whereas in China, it's like $12 or $50 to get tested. So I think here, if they don't do something, and it also weakens Trump, it weakens the position on this unsustainable healthcare in the States, it could really be a turning point, right? And go back to what we said about that vicious circle about market down, Trump odds down, Bernie odds up, market down, etc. That vicious circle, things could clearly accelerate more to the downside. Now, does that mean you have to wake up today and go pedal to the metal and short this with all the leverage the margin clerk will allow you? Absolutely not. But that you have to keep that backdrop in mind, okay? Now, here, what's interesting is we've seen decent volume also coming in, and we're at a key inflection point. As I mentioned out on Twitter today, earlier on, I said, as long as crude is trading back below this this 50 mark, things are likely going to be heavy. Now, we've had the biggest down-to-down day-to-day drop in the Dow in a gazillion years, right? So this is not normal, right? So as we always say, we play for what happens the majority of the time, not what happens 20% of the time, right? So here you'd have to expect some kind of a bounce. And remember, bounces in bear markets or in corrections can be absolutely brutal, right? You could have a short thesis in a market that, there are people who were short 208, 209 and lost a bunch of money because they kept on getting short in the hole on those aggressive rallies, right? So you have to be cautious. But I think if you're coming into today, as you should, thinking there might also be an interesting counter trend rally, sooner or later there'll be some long opportunities. What I would do is I would focus on this KSA, so Kingdom of Saudi Arabia, whatever it takes level. As long as we trade below here, tricky, market heavy. If we get a stick save at the 50 and you start to see the cavalry come in, that's probably the time where you get, long USD JPY, long equities, long crude, right? Everything. Now, also keep in mind that we've got data point on crude today later on. So it'll be interesting if we get a chance to fade inventories as we've seen in the past. So, maybe that's the catalyst for a little bit of a pop, but I would be watching this very, very closely. Move back above and you start to see the headlines coming in and some kind of cavalry pushing this up, then it's time to try to trade those counter trend longs. But overall, what we've seen once again, and which a lot of traders haven't seen, or what we continue to press, is velocity of move. Velocity of move is to the downside. It's not to the upside, right? And when you get these overnight ramps, BS ramps on no vol, etc., these the market gives these back. Now, it doesn't mean it has to give them back straight away, and it doesn't mean you can't go broke trying to fade it, but it's just, that's just the way the market works. That's why they say stairs up, elevator down. So as we've been saying, all these ramp, we said we fully expect the market to give this back, and to give it back in a fraction of the time, right? So you see here is essentially from, call it mid-October, it went mid-October all the way, right? All the way into end Feb. So November, December, January, 4 months to go up. And now, we've already retraced, where's my fib tool? We've retraced 61%, 62% of the move in 1, 2, 3, 4, in 4 days, essentially, right? That's what we mean about velocity of move. That's what it means that sometimes it makes sense to try and be stubborn looking for a setup. Does that mean that you're going to be short getting killed every single time on this ramp because you think it's going to give it up into the fraction? No, absolutely not. But it means that every single time we put in a negative close at a new all-time highs, you give it a shot, you get paid, then it doesn't work, but you get paid on something, right? Here, you try it, you don't get paid. Here, you try it, you get paid a little bit, then it breaks. You try it again here, you get paid a little bit, then it breaks. You try it again here, you get fully paid, right? That's the point. That's also addressing the question we had in the weekly webinar the other day. 50, are you being stubborn? No, I'm not being stubborn. I just understand the location, and I'm taking small stabs. When my payout on the risk reward is 1 to 5, 1 to 6, potentially 1 to 10 or whatever, I can afford to be right very few times and still make money on the idea. But the point is about being selective on your entries, right? So you don't blindly short it, you wait for those negative closes at all-time highs, right? And you get plenty of opportunities to do that. Now, there are other places where you want to be a little bit, which seem like a little bit more stubborn, but it's a different kind of trade, like on the Russell, right? What was our base case? The Russell here is that this has been weak, this is continues to stay weak. I'm not going to go through the whole case for the Russell, but short negative close 1700, as long as we don't take those out, we like our chances in terms of the risk versus the reward of a move back to the seat of the crime of this whole ramp up, right? And here, you don't micromanage it. You're in the position, you let it play out, right? And as long as those highs don't get taken out, you're in play. Now, clearly, there were other opportunities to try and get short again, but the trade is in play. You just have to let it play out. Now, just for reference, remember that as everybody was making all-time highs, et cetera, the Russell, which is an index where about over 40% of the companies are actually hemorrhaging money, losing money, had done nothing, right? Basically, the Russell was holding at where it was those highs, below those highs in 2018. And look at how a lot of people don't get the brutality of this move. Essentially, the Russell, right, in the best economy ever, best jobs, best everything, let me tell you, it's awesome, is essentially trading, right, where it was trading 2 years ago. It's gone nowhere, right? It's gone nowhere. So this is a good sign, right? This is a good sign that the economy is not that strong, that the move is a little bit of a BS move, and that we're sitting on a little bit of a house of card. Now, what are the classical things you want to look at? Of course, you can look at XRT retail, you can look at transports, et cetera, but it's a house of cards, right? Now, that doesn't mean we're not going to be trading to the long side, but it just means that it paid to focus on those things. Now, keep in mind, once again, this is the other trade we're looking at, is that this is another sign that things are not all rosy, right? 10-year yields are the lowest we've seen ever, essentially, right? And that is telling you that investors are not so chirpy on what's going on. Now, would I want to get long here at all-time lows, right? So long bonds? Not really, but if you're holding a long bond, clearly you wanna stick to that position, even though it could be funky. Now, keep in mind, and we've mentioned this before, if you go back and you look at how the German, right? So let's see, I think it's DE 10-year. So Germany, let's see if it's this one. Germany. How come I? 10-year yield. There it is. So the German 10-year, right? And this is something that a lot of people don't get because they don't study the charts. But look at this. Everybody, if you guys remember, was freaking out when they almost printed below 1, right? Then look at this. Once we broke 1, and we've mentioned this before, look how quickly we puked all the way into the 0 mark, right? This move, and I can't stress this enough, can be very, very quick, right? So all those people saying that, oh, well, the US 10-year has never been this low, it can't go lower. Well, that's what they were saying with Germany, right? So be very, very careful about trying to short bonds, short UBs, short ZBs, short ZNs. Now, I think that clearly one of the biggest risks out there is a sharp reversal in the bonds too, and it's going to massacre everybody, but you can't play for that yet, okay? If the bonds are going to reverse hard, you'll have plenty of chances to get in. Does that make sense? It's similar like to the equities. So I would also not be, we've discussed this before, situation where you see a flush on bonds getting sold and stocks getting sold at the same time. We've discussed this a lot in the past, but it's the same way as you don't just blindly sell into strength on equities. You don't just blindly try to do that on the bonds too. So if you're looking at the ZBs or the ZNs, right, just the way to look at it is wait for some kind of a negative close at all-time highs, right? Or at highs. If you want to take a stab, you wait for that to happen. You don't blindly pile into that, right? And back to our lower volatility way to try and get on the trade, our BND trade is still fully in play, right? Still fully in play. Right now, I would lock some more in, right? Because if this is going to go quick, you don't want to be holding your stop here, right? You want to move that and trail that in, but there's clearly a chance for this to accelerate aggressively. The other things I would keep in mind is that we're at a key inflection points really across the board on everything. Look at the monthly charts, right? And this is something I mentioned it on Twitter. Not a lot of people have picked it up. We talked about it at the beginning of the month. Look at the monthlies. They are horrible across the board. It's very rare to see these kind of signals, and you'll see more and more people start to talk about this as we go into the end to the end of the month. But not only ES, look at other stuff, which is interesting. Look at J and K, right? Look at junk. This is very, very interesting. If we start to close negative across the board, and even though we expect everybody, all the central banks to throw anything they can at it, look at Kudlow and Trump. They'll lie, they'll say anything, they'll throw anything to save this. Trump is fighting for his life, but sometimes price has a mind of its own, right? So if you start to see acceleration, you do not want to fade these. So the message is still short risk into all the weekends, still core position short risk across the board, but keep in mind that the moves are already stretched. When they're this stretched, this is the time where you could really have a silly Six Sigma move to the downside too, but that does not happen the majority of the time, right? That may happen 1-2% of the time. So as a trader, if you want to have a long career, you can't spend your days trying to play for the Six Sigma move, okay? So the context is still bearish. Context is still that the penny has to drop. The context is that if overnight or over a series of 2-3 days, we go in the straits from 0 confirmed coronavirus cases to 400, 500, 1,000 or whatever, markets are going to shit the bed, to put it in a technical term. But you can't play for that pressing as a core position. So going into the end of the month, I'd be still holding some core positions, but looking to play tactical shorts. So if you're still holding that core short on the Russell or on the ES, you can look at intraday to try and trade tactical longs on the NASDAQ if you get nice reversals into the last hour, if you see volume picking up, if you see the bids picking up, if you see that crude reverting hard, but still be cautious. The other thing a lot of people haven't mentioned, we're going into the end of the month. Because of the move, I would not be surprised to see month-end flows being negative equities, and I would not be surprised if you see month-end flows being positive, negative USD. So we would expect to see, I wouldn't be surprised to see Kiwi jump a little bit, Aussie jump a little bit, even though those are really going to suffer in the current environment. Now, in terms of USD, and sorry guys, this is getting long. I can't help myself from talking, but there's a lot of things to talk about. USD JPY, this is one of the most beautiful trades out there recently, right? In terms of counter trend, the trade is done for us, right? We said expectation was very tight risk, 20 pip stop for this to catch a lot of people off guard and completely unwind and move back into the scene of the crime, move back into the 100 mark. That's done and dusted. Our base case expectation was also that if equities continue to trade heavy, this would accelerate aggressively lower, and it hasn't. Okay, so it doesn't mean it can't, but it hasn't. So as far as I'm concerned, yesterday into the close, I flanned up my yen shorts. I took off a lot of my short positions across the board, short risk positions, because we are due for some kind of a bounce. Do I have no short positions on? Absolutely not. I'm still short Russell and some NASDAQ. But again, I've taken an awful lot off. I've booked some profits. Remember, the profits are not yours until you book them. But interesting to keep in mind, and I'm more than happy to sell a sharp break on yen if I see it break down on some ugly event and risk, but the core trade is done there. Then the other thing I wanted to talk about very, very briefly is also the Euro USD. So Euro USD, swing long in play. Once again, every time people start calling for the end of the world, the end of the euro to be sub 1, we get long and we get paid. I'm not going to go through the whole discussion again, but let's see what happens. Right now, this trade has legs. What's interesting is that, you see these weekly reversals at pivotal numbers, at core numbers, at round numbers, in the context are very high odds trades. So here you should be in a position where you locked in a free trade. Well, apart from your open profits, but it's moving nicely. The other thing a lot of people are going to be focusing on is how we close the monthly. I personally couldn't care less because this is a big ask to go positive on the monthly. I wouldn't be surprised if it did, but it's not my base case assumption because I wouldn't be surprised if anything happens in the market. Here, I'm still focused on this trying to hold, and all things being equal, with all the news we're getting out of Europe, it's still holding quite well. We'll have to see if this is also a function of those month-end flows and some dollar selling propping it up, and then they smash it back down next week. We'll have to see. But as I also mentioned, that 0750 is a key level. That's monthly R3. There are a lot of confluence support there. Our base case scenario was that it was going to hold. It might still break, who knows, right? But that this 0800 to 0750 is a really good support to play again. And when you get that weekly reversal, it's worth a shot. Now remember, this could easily pop up very aggressively and still get shwabammed. This could easily reverse 50% of this move and still get shwabammed, right? We don't know. We have no idea. We don't have a crystal ball, but we do know there is an asymmetric opportunity to play it to the upside, and that's what we do. That's what we try and execute, okay? So again, I'm going to shut up now. I try to keep these short, usually 5 to 10 minutes. Unfortunately, we're almost at the 19-minute mark. Again, don't hesitate to email me if you have any questions, anything you want me to discuss and focus on. Unless something crazy happens, probably next video will be on Sunday, but base case assumption here is, as we said on Sunday already, heavy into the beginning of the week, midweek. If we get any kind of bounce, we're more than happy to sell that to be short into the week, over the weekend again. Okay, let's see what gives. Thank you so much for listening. All the best. Talk to you guys soon. Bye-bye.